Hello, I'm Dr. Matthew Sim. How are you feeling today? I hope you're feeling galvanized. If you're feeling sad, um, go and play basketball or plan for a trip to Beijing. When you're Beijing, visit the Temple of Heaven. This is a building built by the Ming Dynasty sometime around 1420. It's a place where the emperor will pray to the God of Heaven to bring a good harvest. Right? It's an interesting place. There's a spot in there when you go there. The emperor will stand when he's praying. Right? Just stand on the spot and take a selfie of yourself. I think that'll be interesting. Ipisai. Okay, today I'd like to talk about how much bond should you keep in your portfolio. Right? Warren Buffett, the billionaire, claims that when he dies, he wants 90% of his portfolio to be in S&P 500 and 10% to be in bonds. But then he's a very, very rich man. 10% of bonds to him will be sufficient for anybody. Right? Ray Dalio, the famous hedge fund manager and also very rich man, suggested that a person keeps 55% in bonds, right? And the founder of Vanguard, John Bogle, suggested that the portfolio be at least 50% in bonds. So what should the ideal one be? It's up to you. These three are the best. I'm just an average investor, so I will put more. I'll probably follow John Bogle or Ray Dalio. It's a more conservative amount. Puts about 50 to 60% of your money in bonds because stocks fluctuate, and but there are many different types of bonds. You have to buy the good quality bonds, the AAA rated bonds. The best bonds are government bonds, but it depends on the government. If it's US government, that's fine. But some of the other governments, their bonds may be a bit questionable, right? Some European bonds are questionable and they are paying too little right now. So US bonds is fine, or any bonds with decent returns will be fine. Right? You don't want to buy too cheap a bond as well, because if you buy at the rate that is low, you have to hold it until it ends, and it must be worth your while to hold the bonds, right? So ideally, I think in the past, a great bond would be at least 3 to 4%. Right? Ideally, it would be 4% for the long term, maybe a 10-year bond, 20-year bond, or 30-year bond. 4% would be a decent amount. But unfortunately, you cannot get that sort of bond nowadays, right? So buy bonds and hold it to the end, and you won't lose the principal, right? But if you buy a bond fund, that's different. Bond funds fluctuate, it never ends, and you don't know whether you can get out with your capital, right? So think about it. I see you next time. Boom.